Hey, it's Eric Osnes with Homebridge Financial Home Mortgage coming to you from Camano Island with my weekly update on mortgage rates and the economy for the week ending September 2nd, 2022. Will September bring better rates? Just like some of us, mortgage rates were overheated in August. They were looking pretty good in July due to signs of a slowing economy, thanks mostly to falling energy costs. But in August, bond traders changed their minds about that, bracing for prolonged higher energy costs. Jerome Powell's hawkish speech at Jackson Hole Economic Summit last week sealed the deal, and rates rose. Bonds continued their negative trend into this week, but we got a little bit of a reprieve this morning when August employment and income numbers were released. On the surface, they look strong. Jobs increasing by 442,000 in the month of August, but a closer look reveals that 82% of those job creations were to 16 to 19-year-olds, not exactly high paying positions. And the unemployment rate went up to 3.7% from 3.5%. U6 employment, that's a statistic I like to look at, which includes people that are marginally employed and those seeking work, went up to 7% from 6.7%. How can unemployment rise when 442,000 jobs were created? Well, that's because the labor force, people searching for work, also increased by 786,000 at the same time. I guess that's good news for people that are looking for jobs now. Maybe they're running out of savings or something else has changed. There's certainly plenty of job openings. According to the Department of Labor statistics, 11.2 million jobs are available in this country. Signs of a weakening economy is good for mortgage rates. Until there are continued clear signals of a slowing economy, the Fed will continue to throttle us with higher rates in their very late battle to fight inflation. The next FOMC meeting is on September 21st. That's when the next Fed hike will be announced. In the meantime, bond traders will continue to analyze economic stats for signs of a slowdown. For the week, mortgage rates are higher, although rallying this morning. Fingers crossed that trend will continue into September. Here are the national averages. 30-year fixed rate conventional, 6.02%. That's up 0.29 from last week. 15-year fixed rates, 5.29. That's up 0.19 from last week. FHA and VA 30-year fixed rates, 5.32. That's up zero point 0.2. And jumbo 30-year fixed rates 5.12. That's also up zero point 0.2 from last week. In other news, yes, the seller can pay your closing costs. With more inventory on the market, many sellers are adjusting their expectations, sort of their reality of the market, and becoming more flexible with buyers. That's good news. And it's created opportunities for buyers to have their closing costs paid by the seller in some circumstances. There are limitations on how much a seller can pay. And in no instance can a seller contribute towards your down payment. But here are the rules. For a conventional loan, if the down payment is anywhere less than 10% down, the seller can pay up to 3% of the sale price towards allowable settlement costs. If the down payment's more than 10%, the seller can pay up to 6%. Same with FHA. If the down, well, no matter what the down payment on FHA, the seller can pay up to 6% of the sale price. And for VA financing, it's almost sky's the limit. Anything that's reasonable, the seller is allowed to pay. The seller can pay all traditional closing costs as well as reserves or property taxes, homeowners insurance, homeowners association dues. They can also pay points to permanently buy down your interest rate or even pay for a temporary buy down. That's where you get an interest rate that's 2% below market in year one, 1% below market in year two, market rate years 3 through 30. Just kind of wait for those rates to drop and then refinance into a lower permanent rate. And if the seller initially says no to this idea, consider increasing the price of the home to pay for the closing costs and then have the seller pay them. The seller still gets their price, you have less out of pocket expenses, and hopefully a lower interest rate along with it. With mortgage rates currently elevated, the rate for a 0 points option is pretty high right now, in some cases, not even available. Paying points for a lower rate or even a temporary buy down can make a huge difference for affordability. And having the seller pick up those costs can make it all possible. I'm here and available to talk about these strategies or many other ways to make your home more affordable. Just reach out. You can call me, Eric or call me at 206-915-3742. Email me, Eric at ericismybanker.com. Look for me on social media, Eric is my banker, and be sure to subscribe to my weekly updates so you can stay informed on what's going on in the market. I hope you all have a great Labor Day weekend. Stay safe out there, and I'll talk to you next week.